Welcome to the weekly swing low. It's June 29th, 2025. So we've got just one day left till the close of the monthly June candle, and it will also be closing out the 6 month candle and the quarterly candle as well, obviously. And this is our ticker. We'll start with SPY, and you can see this is our quarterly chart, and we did form that bullish outside quarterly candle. We talked about on last week's update. Maybe we wouldn't get there, and we would end up with a compound bullish outside candle. But Monday, we'll zoom in there. But Monday we had a bullish outside candle. So again, these things happen on all time frames. That's why it's so important to understand to look at the different time frames. But the Monday bullish outside candle started a big rally, and so we completed that. So again, as a recap, an outside candle is when this candle made a low below this candle's low. Like you can see, look at this massive wick, right? All the panic, right? We were well below even the quarterly 10 period moving average. So the 10 quarter moving average, we fell below that even. And then a big rebound. And then once we started to rebound and this thing went green, very high odds, we're going to make a higher high above this, which is above 609. And here we closed at 615, so we made that higher high. So zooming into the daily chart, I talked about how, so this was your Monday candle. And so you can imagine how many stops got triggered when this low came, right? Like, look at this. I'll draw a line just to make sure everybody can see it. Right there, see? Right, we had an intraday reversal, right? Price broke below this low and then rallied back. So by breaking below this low and then breaking above the high and closing above the high, on top of that, Monday was a bullish outside candle. It cleared out all of this consolidation. The next day we gapped up, and then we've been off to the races ever since. And so there is still that gap down there, and there's also another gap down here. And so if we zoom out in terms of where, like, think about like this in the context of cycles. Remember, several weeks back, we talked about how this was a really shallow daily cycle low, right? Daily cycle lows are not usually this short, right? We topped out on day 29 and we bottomed on day 33, and it really wasn't not a very sharp move down. We did close below the 10-day moving average, which is helpful. So we're now 23 trading days from that low, that day low on day 33. So I mentioned this in last week's update, right? Like as of last week's update, when we recorded that, we had this candle here, right? And we had a high on day 12. We've now made a higher high above this candle, right? And we went on to make a new all-time high, and so we're now on day 23. So that means we're getting later in the daily cycle. The previous daily cycle topped out on day 29. The one before that was really bearish, so not a great example, but that was day 8. This relatively bullish, well, actually, this was not a bullish one, but that topped out on day 25, day 23, day 29, day 19, day 30. All that to say, we could certainly rally for another couple of weeks, maybe at most, right? Like, let's say we rally for another 2 weeks. That's 10 trading days. That would put us on day 33, which would be a very long daily cycle rally. So at some point, we're gonna start the daily cycle decline, which is going to set up a great buying opportunity. Tactically speaking, your low from Friday is $610.83. So you want to watch that level. A move below that forms a daily swing high. That's how every daily cycle decline begins. And depending on where that daily cycle decline starts, you imagine we come back and at least retest this gap area, if not close it completely. And of course, depending on how that decline looks, you'll see if this gap is in play. I mean, if it's a healthy decline, it probably won't be. So daily cycle high is right around the corner, is my guess. But that means we could still rally for another couple weeks. So that's I mean, when I say right around the corner, I mean not necessarily like Monday. But more importantly, if you look at the weekly chart, we just closed out week 11. Right, look at this beautiful price action. But notice what price tends to do. The weekly chart is a great place to see it, right? Like this high this high right here is a new all-time high. and then we get this pullback, and then we get this rally back. Like, pay attention to that, right? Like, you see this rally back to this all-time high. So we make a close above that all-time high here, above this high. And then what happens the next week? We get a doji. And then we even get a little bit of a decline, but it gets bought up, right? Higher low. This is a higher low than that one. And then we continue to rally, right? This is another rally to all-time highs. And then what happens? Another decline. And then what happens? We recapture, and then we get a decline. So all that to say, I would expect now that we have made this new all-time high, we're trying to break out into price discovery, that we're probably gonna see some consolidation this next week, or which is all that to say, even if we are gonna rally for another couple weeks, it probably won't be in a straight line. We maybe get a little bit of consolidation and then one more burst up or a couple more burst up. This is not to predict what I expect is going to happen, because that's not useful. What is useful is what is useful is understanding what you might expect, right? Like, based on the price action that we're seeing, and then monitoring that price action in real time. And most importantly, look again, like we talked about this, and like looking at this, look at this wick, right? This is likely a long-term bottom, and then that means we're literally only on the second month of that long-term bottom, right? So we could get some choppy action, some consolidation, but as long as we're above $565.75, which feels really far down from where we are here, but once we crossed above that, we formed a monthly swing low, and now we're just building on that, and so that should give you a lot of confidence. So that's SPY. So just to recap, that Monday level, that low is $610.83. If we were to close below that, that would form a daily swing high. I don't expect we're going to get that anytime soon. But that said, now that we've pushed to all-time highs, it wouldn't be surprising to see some consolidation, some profit taking. Really, is all it would be, right? Before we really make a sustained move above all-time highs, like let's say 10-15% above all-time highs. And so on the weekly chart, again, we're on week 11 right now, and I wouldn't be surprised to see a rally to like week 13, 14, 15. So we could easily have another few weeks of rally to go. Again, even if it's not all in a straight line. So that's SPY. Let's move on to the other tickers. So QQQ, they're all a very similar story, just slightly different, like different levels, obviously. So for the Qs, that low for Friday is $544.54. The Qs also made a new all-time high, I believe. Let me just double check that, because the Dow definitely did not. Yeah, the Qs have made a new all-time high as well. Again, same kind of story for the Qs. That monthly swing low is active as long as we're above $479.02. That was your first signal, and that happened a while ago. And you have to just kind of trust the process. Obviously, set your stops where it makes sense. But again, I think this consolidation slash pullback is going to give folks a chance to enter. Also, week 11 for QQQ, similar to SPY. And again, we have formed that bullish outside quarterly candle. That's the other thing to keep in mind. Remember, that bullish outside candle, that pattern. So we didn't actually get that for QQQ. So for SPY, we did get a bullish outside candle, as we talked about. That tends to be a launch pad for more for higher prices. And so the fact that we're getting that on a quarterly candle is super bullish. You don't get quarterly outside candles very often, and so getting a bullish one is is a very good arbiter for what we might see priced in the next quarter, right? Like, we're probably going to have an up quarter, which is to say, for Q3. So that's the Qs. So watch that level to the downside. In terms of the Dow, hasn't made a new all-time high yet, and so that would be, we're looking at the ETF that represents the Dow, DIA. So it needs to get back to 447, and we're down here at 438. So a little catch-up trade here. For the DIA, that monthly swing low is active above $421.92. And I know these prices sound like they're far below us now, but at some point we're going to have a daily cycle decline. And then at some point, we're actually going to have also a weekly cycle decline. And that price starts to become very important. Like, is it going to hold that swing low? That becomes your buying opportunity, right? If you see price form a higher low and it's above this swing low level, that applies to all of these indices. That becomes your like, oh, well, that's my signal, right? Like price forms a higher low, like right here or something like that. I mean, that's really low, but you get the picture. Use that monthly chart to improve your confidence in your trade and trust your process. IWM is in a similar spot where we didn't make an all time high yet, so another catch up trade. The ticker TNA is the leverage play. So for IWM, Friday was actually a red day though. That's not great, and it was a bit of a doji candle. So we're gonna open as an inside candle on Monday most likely, and so the range of that candle is a high of $217.41 and a low of $214.13. So about a $3 range. And so you want to watch the downside target for that again, just like the other indices. Close below that would be a daily swing high and not a great sign. Because at this point, on day 23, any daily swing high is kind of suspect, right? Like that could be your daily cycle high right there. All the same kind of thing. So for IWM, that monthly swing low is active above $202.77. That's your big picture chart. SMH, let's move on to semiconductors. I'll start with the monthly chart. I'll remind, this is important. SMH actually topped out. I know I say this almost every time every video. SMH topped out back in July, right? And so like we've had a much longer decline than the broader indices, and so this is a much more this is what you would expect a cycle to look like, right? Like you rally for 21 months and then you decline for like 9 months in this case, right? So a full 30 months, right? From this low here. So again, a rally of like 20 months and then a decline of 9 or 21 months. And so again, this is just the second month of a rally. That doesn't mean we're going to get a rally that's this gigantic, but like think about the big picture. After this decline, we got this rally. So now we're about to get a rally off of this decline, which was more of a bull flag, right? We kind of price held up until it like really flushed this low here. And so this is a really high probability trade here. And you just think structurally, you know, this thing could have many months of upside, the AI narrative, etc. So SMH is a really good one. Similar position to all the other ones, though, tactically. We're late in a daily cycle. Friday was a doji candle. The range is a high of $280.50 and a low of $275.64. So that sets your very clear levels. There is a gap, like all the other indices. There's a gap, like on the weekly chart as well. In this case, the gap is between basically $234 and $225. So a pretty big gap. Again, we'll see when we get that weekly cycle decline. That becomes a nice little reference point, forming a higher low above this gap. Very bullish. But again, I really like this name here. We'll zoom out to the quarterly chart just to just look at the beauty of this. This was your high back here, right? This is just viewing that on the quarterly chart, and you have this kind of consolidation, and then a big bullish outside quarterly candle to close out. I would expect a big, nice green candle for next quarter, and I am long for that. So that's SMH. Dixie. So Dixie is continuing its weekly cycle decline. We talked about this on the last in the last video. So we just closed out week 9, and week 9 was it was a bearish outside candle. Now, I hope this is not like I hope it's starting to kind of click how important that pattern is, the outside candle. So we made a little higher high right at the 10-week moving average, and then just flush the low, right? It's only week 9. The previous weekly cycle bottomed on week 30, right? The one before that was actually shorter, bottomed on week 16. So this could be setting up a shorter one, but 9 is still relatively early, and having a bearish outside candle is a harbinger. And if you zoom out to the monthly chart, you can see we're on what looks like month 23 of a long-term cycle. that topped out on month 18. Now, if it's going to be a left translated cycle, which I would expect it will be, that means it would decline for at least 18 months. And that means, right, like that's how it would work, right? It would be, like let's say at least a 36-month cycle. So that would give you a low around July 2026. I think we talked about that in previous videos. Doesn't mean it's going to happen in a straight line. It's going to bounce around at some points, but you could see a decline for a protracted period is what this is setting up here. That's Dixie, and like if you zoom into the daily chart, it looks to me like we're in a new daily cycle. We're on day 11. It's a daily cycle that topped out on day, what is that? Topped out on like day 7. So we're relatively early in a new daily cycle. Day 11, I mean, not like probably like in the middle of it. And so we still have at least a few weeks of decline, even before we get, like, let's say a little bounce here on the weekly chart. That's Dixie. The US 10-year appears to also be declining in the weekly cycle. So this one, it's been consolidating really. Again, we've been talking about this the last many weeks. We had this gigantic green candle that formed a weekly swing low, right? That happened back in that right. This was the week that the market bottomed, right? So that was the week of April 7th. And ever since then, we've just been consolidating for like literally a few months inside the range of this gigantic candle. So the low for this candle back on that week of April 7th was 3.88, and the high is 4.59. So I suspect we're going back to the lower end, so towards that 3.88. The first stop before that, you can just see visually, the first spot that we would potentially see a bounce is around this pivot here. So that's 4.112. I'll just bring this line down here so that I hope that's obvious, right? Like this pivot held before, right? When price looked like it was going to try to test the bottom of this range. So we'll see how it reacts down at 4.112. If that doesn't hold, we probably see ourselves back at the bottom of that range. And if you think about, again, what does that mean for the weekly cycle? We went on to make a slight higher high on week 7 above the high of this one. But I mean, it was just ceremonial, right? Like it's still basically consolidation inside this range. So this is setting up to be a weekly cycle that may have topped out on week 7, but in reality, kind of topped out on week 1 in a sense. So very clear levels here, though, right? Like what happens when we get the 4.112, which seems like a very likely target, like your next kind of reaction point. And if you zoom out to the monthly chart, this is setting up basically a double top, right? We made a high back in October 2023, and we made another high back in this January, which was lower than that high. But this is all just a tight range. So this could also explode to the upside. No need to go it's not really giving us a true signal just yet. This is all just consolidation. But that's the setup here for an epic double top that would take us to the low 3s, so 3.25, something like that. Test the bottom of this range is the potential setup here. So that is the 10-year US 10-year. Let's look at oil. So oil obviously getting moved around because of the Middle East stuff. And I mean, wow, we talked about this last week, how we got this big up week, but it was coming relatively late in a weekly cycle after kind of churning here, right? Like this is where the low formed. And then we kind of had this retest of the low that held, right? But we wasted a ton of time. And then the week before last, we basically just had an inside week. And the levels were very clear, right? We had to get out of this range. So the range of a high of 75.70 and a low of 67.88. And what did price do? It poked its head above that range and then flushed. I'm going to say it again, right? This is a bearish outside candle, right? Very important pattern to understand. And if you look at what how this manifested on the daily chart, it was a daily bearish outside candle that created the weekly outside bearish candle, right? Like this daily candle poked up here and then just flushed. And then we got continuation on Tuesday. So these two candles become a compound bearish outside candle of all of this. and turn the entire weekly candle into a bearish candle. And then what do we have? This is just consolidation the last 3 days. So this is your Friday candle, Thursday, Wednesday. So if price can't hold above, call it $64.53, and I suspect it won't be able to, we probably get a flush down to the 60s, right? Like that's what this setup is. And maybe that's too obvious, right? That we don't get it. It doesn't play out here, but that's what this price action is suggesting. This thing made like one last gasp, and now like that rubber band action takes it back down. That is oil. All right, we're going to move on to TLT. So TLT looking like it made, like, look at this bottom here on the weekly chart. It's holding here on week 18. We've been talking about this. As long as price remains above $85.80, this is a weekly swing low coming on week 18, which would be really early. This thing tends to have really long weekly cycles, like in the 25, 28, even in the 30s. The one before that was a 38-week cycle. And maybe that actually makes sense, that this was actually longer than usual, so we have a shorter one to balance it. And here we are potentially on week 5. It was a bit of a doji candle. This thing loves to retrace really, really hard, like back and fill. The high on this is $88.16 and the low is $86.43. So that's the range that you want to watch there on the weekly, potentially week 5. Next we have and on the daily chart, always important to think about all the time frames. This looks like we've been advancing in a weekly daily cycle for 24 days. So very similar to the stocks, right? Basically mirroring them, except this has been, as I talked about, the choppiness, the backing and filling, look at that. This thing loves to back and fill, right? Like look at this big move up and then, I'm going to fill it. So big, you can incorporate that into your strategy, of course, right? That's why I say, know the character of the things that you trade, right? And so this thing is going to make a daily cycle high, probably similar timing to the broader market. So that would be those are probably going to move in a very similar fashion. What about TBT? So TBT, similar kind of thing. Doing the opposite, I should say. So for TBT, the weekly candle trying to form a low. That range is a high of $36.51 and a low of $35.16. That's the important level to be aware of for that, I would say. Let's move on to Bitcoin, and then we'll look at precious metals, uranium, and natural gas. So for Bitcoin, we talked about how this was a daily cycle low, right? Since then, we've broken below that low, and we're now on day 24, if this was a daily cycle low. The problem is, this is now a failed, quote unquote, failed daily cycle. We're not supposed to be making lower lows. That said, price action is the ultimate king. And so we could go on to make all-time highs and do price discovery and just kind of leave this behind. And so I want to be nimble for that. I also want to be careful that it's possible this is actually your daily cycle low, and we're actually just on day, 7, right? So we want to be nimble here. But more importantly, if we look at the weekly chart, I like the setup here, right? Like, look at this. This higher low is holding. It's really just that simple, right? This low here is 98,225. So it poked below 100,000. I can imagine how many stops were triggered. Look at all these wicks. How many stops were probably placed in this kind of neighborhood here, right? And then this thing zooms up. Now, that said, we don't actually have a weekly swing yet, right? Like, price actually needs to break above this high. So we're probably not we're recording this on a Sunday. We probably don't get there today, but what we want to see is this, right? Structurally, by breaking above this high here, so that's 109,000. So breaking above that high here, that leaves this behind as a little higher low. And that's what we want to see. At this point, I think this thing has kind of proven itself enough. I would actually you think about the daily chart, more simply, this is your level that needs to hold above here. So call it a 106,413, right? As long as price can stay above that pivot, right? This is all consolidation at the upper end of the range, or better yet, If price can break below that and recapture, that's an even better lower risk entry. And bigger picture, still advancing in the 4-year cycle, right? Not super late though, right? Like again, I keep saying I would expect we get our high later this year, and so I would be ready to take profits, but probably in the $150,000 range. I wouldn't be surprised. That's Bitcoin. ETH is doing a very similar thing, just different levels. So for ETH, it's trying to hold a higher low on the weekly chart above 2113. And for ETH, that line in the sand for me would be something around 2381. Again, even better would be a break below that and recapture. That's a lower risk entry. All right, let's move on to precious metals. So gold is in daily cycle decline. We talked about this in the last weekly update. It continues now. We're on day 29 and we topped out on day 20. And so we should get our low any day now, really, maybe this week at some point, especially as we see Dixie is careening into a weekly cycle low. And so patience is all that's needed here. On the weekly, we did close as a weekly swing high. That's important. So by closing below 33.40, this is a weekly swing high. The catch is this can just become fuel. This could become a higher low, which is what I would expect. And just tactically speaking, look at these two candles. You see this candle, price gets rejected, can't make the high. This candle, price gets rejected to the downside, can't make the low. So think about these two candles kind of combined. I'll just draw just to make it maybe simpler, right? Like this is just a range price has been playing in, right? Ever since this thing happened, right? This kind of detente. Price tried to go up, could not. Tried to go down, could not. And so all of this, look at that. This literally stopped almost exactly at this wick, like these 2 weeks, right? And now we're coming back down, probably to test the end of this range here. And of course, we have to see maybe this holds here. And again, not a coincidence. Like this isn't random. Look how price opened here, right? Like we kind of held here and it held here back then, right? Like that becomes an important level, that 3,200. It's also a round psychological number, so that makes a lot of sense. And the last thing I'll point out, in terms of just looking at how price action, like how important it is to understand levels, this candle forms a swing high, right? And notice where price kind of like rebounded, right where that swing high, and notice this again. Look, where did price go? Like this line here corresponds to this swing high. So that level is 3,260. Price here makes a low at 32.55.90. So it actually undercuts it slightly. So in other words, a false breakdown. These levels are important. There's a reason price reacts around those levels. It's not going to be exactly at that specific level to the tick always, but like in that neighborhood, just short of it, just above it, important to be aware of. And so if price closes below that level, that's going to be an important signal. So we're going to want to watch that very closely. That's gold, and gold is going to be the thing that's going to dictate what happens with something like a silver. So for silver, look what happened on the weekly chart. We talked about how we need to close below $35.47, and we didn't. We couldn't. We got below there for a minute, but then it bounced back up. And so now we've set a new line in the sand at $35.29, right? And so that's just below this low here. And when we had a doji of a weekly candle, and so that range is a high at $36.83 and a low at $35.29. Nothing to really do here until gold prints its daily cycle low. And at this point for gold, if we were to close Monday, just like hypotheticals here, if we were to close Monday above $33.28, that would be a daily swing low. I'm not saying that's what I expect, but as of right now, that's where we would need. Now, if we go on to make another lower low on Monday, that swing low level that we need, like the goalpost gets lower, right? Like let's say we do a candle like this, then that means we're going to need our candle to be this, right? Like, so it's a moving target, but that's what it would be right now. And so you're just going to watch for that. I would expect that to come in the next week or two. In GDX, similar picture. So for GDX, We have formed a swing high on the weekly chart. That's important. So that's as long as we're below $51.47, that is a swing high, and so you want to watch for that level. I if you want to play it really conservative, you could play a recapture of that level. I think that would be a great sort of entry. You imagine a candle that's doing something like this, right? So that's GDX, the miners. And I would say platinum is also working now, right? Platinum is something to pay attention to. Again, finally, like look at this thing. It just keeps running, right? We'll just zoom out to the monthly chart. Just many months of consolidation, and then just this like huge kind of breakout candle. And so the catch though is on the weekly chart. We are, how many weeks are we in? We're 11 weeks in. So it could run for a bit, right? This is an 11-week run. We've had past runs as long as 22 weeks. That was actually the bullish run for gold. So I mean that was like one of the most bullish. And so week 11, we do have this pretty big wick. Just very tactically, it tried to form a swing high. And so if this thing closes below 1320, that is a daily swing high. But the way this thing is kind of running, that could be your setup for an entry. Like look at this. This swing high was bought up. This swing high was bought up, right? The only catch is we've been running for quite a while in a daily cycle. I talked about this. This is, wow, we're at day 58. So I can't imagine this can keep running for much longer without a daily cycle decline. So I'd be careful chasing it up here. That's platinum. Natural gas is also printing a nice daily swing low. That's a beautiful big one. So by closing above $3.46, this thing has printed a nice big swing low on the daily chart. And on the weekly, it represents a nice little wick and a higher low. So holding a low at 3.28 on the weekly chart. So that's actually kind of bullish. That would suggest week 8. So this is week 9. That would suggest we could still be in weekly cycle advance, right? Trying to take out this high, or trying to take out, I would say, this high, like this area, like the 420s, or get back there. So that's an interesting setup for natural gas. Okay, finally, we'll look at some platinum names. So we're starting to pull back a little here. URA is stalling a little bit. We are on week 11. CCJ on week 11. So CCJ, I mean, this would be a relatively long weekly cycle advance for it. That's week 11. You can see week 11 tends to be when we top out, actually, like just historically. And so I'd be careful chasing here. But that said, any pullback could be a really nice buying opportunity, because long term, if we zoom out to this monthly chart again, look at this nice big wick after this kind of double bottom action. Very, very promising here. That's CCJ, but it's the same kind of picture for like URA. Actually, we have a bigger undercut for URA, or URNM, a massive undercut for URNM. These are sitting under really nice, beautiful swing lows on the monthly charts. So all really, really beautiful stuff. So those are the updates for today. Thanks for watching.